Hi there, Serial Trader here. Let's have a look at the major U.S. indices, and well, certainly significant development from yesterday's price action. And we had the Doji star yesterday, which I pointed out was either a pause in a still developing, at least short-term uptrend, or it was a reversal candle, and that today would likely give us good clarity as to which direction it traded. And definitely confirming that it's a reversal candle, and not only do we close this gap from Friday, we went well beyond that and closed well below the T line. Very huge intraday range here and closed near the lows of the day. So significant bearish development, that's for sure. Now it's possible we have our WX and now Y failed to make a new price extreme. So a truncated Y wave. Instead of getting to the equality relationship a little higher up here in the mid 28s. So possible we now have the wave 2 or wave B peak in place, and now we could potentially be heading down in either wave C, which if it's a C wave we'd go towards that equality level at least at 24.77, which would still be below the February lows, or if it's a wave 3, we put some potential pressure on the 1618 relationship, and again that's below 2300. So those two levels coming back into play here just within a day. I thought perhaps we'd just kind of have a trendless sideways move maybe towards the end of the year and then finally break into January, but we may be going there sooner than what initially appeared to be taking place. And I'll just highlight this possibility as well because this is still in play. We could still be doing this 5 down for an A, and this could still be a developing triangle B wave. So we have an A wave up, B wave down, C wave pivot in place. Now if we come down here but fail to make a move below the low from November there, I believe that was a November low, which on SPX is 26.3109. If we fail to break that on this move down, find support, start coming up again, then this triangle interpretation will gain some traction. And then once again, if we do that, make a higher low above that B wave, come up, make a lower high below the C wave, then we'll have a pretty convincing looking contracting triangle wave B in place, and then a thrust down at that point. So I'll just put on a couple trend lines here since it is a potentially developing triangle. Put on the AC trend line and also the BD trend line. Well, we don't actually have a D wave yet, but just kind of a rough estimate of what the BD trend line would be like, and obviously we'll adjust as price unfolds here. But that's a potential scenario in play. This would consume more time before we break, whereas this one basically implies that we're coming down right away and we're just going to start breaking support in short order, likely before the end of the year. But we don't know yet. Obviously today, being a substantial sell-off, looks like there's some momentum on the bearish side, but sometimes they can just stop in its tracks and start bouncing again. So we'll have to see how it unfolds. Okay, so that's SPX, the wave chart, good for now. We'll go to the Thinkers from Candlestick charts. Oh, and before I get into this, so I put on a SPY put position today, and certainly nowhere near the high of the day. In fact, it had already declined quite a bit when I went into it, but it's still currently profitable. So let's see, this is the current price that SPY closed at. So right now it's about $2,000 open profit here. So what I did was I bought 20 SPY puts, 290 strike, March 15th 2019 expiration, so well over 90 days till expiration, and I paid a debit of $20.50 per contract. So the maximum risk, if you were to be at or above 290 at expiration, would be $41,000. Obviously, that's substantially lower as long as there's time left in it, as illustrated by this purple line. I went so deep in the money, so that basically of this $20 debit that I paid, only I think it was less than $2 that was actually extrinsic value. The rest was all just intrinsic value, based on the strike price and the current price of SPY. So very, very little time decay to consider on this position, which makes it easier to hold on to a little longer as time passes. And obviously, if we come down to our, let's say we go down to that 230 level, which would be kind of the 1618 area, or I guess it would be closer to 225 or 223. The 1618 relationship, that gets us down, 80 plus $1,000. If we just go down to 250, which would be around the February lows, it's still close to $40,000. And obviously, going back up to anywhere, putting pressure on that 280 mark. If we were able to break the resistance levels there, I think it's just over 280, I would close it, and that would be a roughly $10,000 or so loss should that happen. So it's also just partly to hedge my long CGC stock, although that's about $1 away from being stopped out. So it'll at least form as a somewhat temporary, maybe loosely correlated hedge for my CGC stock position, which is large. But if I get stopped out on CGC, which isn't far away from happening at the moment, maybe $1 or so away, if that happens and the market just starts cratering, well, I'll obviously leave this in place as more than a hedge and actually just embrace it as a bearish long and write it down. I might make some modifications to this position, maybe add to it, or partially convert to a spread if it really goes in my favor or something. But at the moment, just long the 20 SPY puts. So I just side point that out. Just disclose what my current position is and why. And okay, so on the daily candlestick chart here of SPX, I won't do the weekly or the monthly. I just did that yesterday. Although the weekly is already looking... Maybe I'll just look at the weekly just quickly. So, not that the week is closed, but let's say we close the week somewhere around these levels, and you'll see that we're rejecting quite nicely off that 50-week simple moving average, and also that 20-week simple moving average wouldn't even quite come up to touch it, just like we did over here. Didn't quite touch it, and then obviously found resistance before that. But below the weekly T line once again as well, if I point that out. Currently, the week's not over yet, but Thursday and Friday, we'll know more after that. But yeah, so back to the daily. So a nice doji star, what now can be considered doji star reversal candlestick. Very strong confirmation today, a very strong down day, closed near the lows of the day. We got into that overbought condition on the oscillator, and now we're coming off of that overbought condition, so plenty of room to the downside before we be anywhere near oversold. And you can see this thing just so neatly marks pivots, top and bottom pivots. And I think I pointed that out yesterday as well. So that's been working nicely. And it looks like this 50-day simple moving average is just on the cusp of crossing below the 200-day simple moving average. So that's the death cross for SPX. That's certainly not a bullish development at all for stocks. And yeah, we just didn't even get up to the previous resistance levels here that were just above 2,800. So we made a lower high. I was actually expecting to put pressure on this equality relationship and maybe the top of this channel, but that looks like it's less likely at this point by a large amount. So we'll have to see if we can break these lows, or if we form a higher low and we continue to, perhaps do that triangle pattern that I mentioned. But I don't think, short of some sort of miraculous recovery on Thursday, I don't think we're just going to stop on our tracks here with such a strong day down. There's likely going to be some follow through, but we'll see. All right, so that's SPX daily chart. We'll go to the Dow Jones Industrial Average, just have a peek at that. And okay, so the Dow also did a doji star, gapped up from last week. Very strong rejection, nice reversal doji star on the Dow, and we closed well below the 200-day moving average once again. The Dow is quite a bit further away from doing the death cross, although directionally it still looks lined up with the other indices. And well, you see we got overbought on the oscillator here, and that was a good place to mark the peak, as it has been in the past here, and you know, over in this area as well. It coincided quite nicely with this obviously all-time high top, and then, you know, it's marked some bottom pivots as well quite nicely. So this oscillator cannot be ignored. It's been pretty reliable, even though it's so simple. And if you're interested in the settings for this stochastic oscillator, it's not the standard settings, so I'll let you know what it is. So obviously the overbought and oversold horizontal lines are just 20 and 80. And then the K period is 12, the D period is 3. And then the rest is all pretty standard. High, low, close for price H. Price high, price low, and price close, high, low, close. And any more settings to reveal there? Slowing period 3, average type simple, show breakout signals, no. So you may not have any of those or some of those options on your platform, but if you're using Thinkorswim, that's how it's all set up here. Anyway, yeah. So back to the chart. Dow looking bearish, likely to have some follow through after such a significant day. You know, basically 800 points down in a single day on the Dow. That's a large price bar. In fact, let me just take a little measurement here. So through all the volatility that we've had, so this is our price bar. It's bigger than this price bar. Let me find one that's bigger. It's bigger, certainly on a closing basis. It's bigger than this price bar, although intraday it's a similar size. And this price bar is bigger, slightly bigger. So it's the second biggest price bar to the downside that we've had since we started the decline there from our September high, or sorry, in the Dow is the October high. So that's notable. Very strong down day indeed. Okay, so that's good for the Dow. Well, there's actually a gap down here as well, so a bit of the hope maybe of just closing this gap and then making a higher low and maybe doing a triangle in the Dow as well. Although if the immediately bearish scenario just gains steam, then we're looking to take out these lows in short order, but we'll see how this plays out. Okay, so switching over to the Nasdaq Composite. And the Nasdaq Composite, very strong down day. Very clear death cross already in progress, 50 crossing below the 200 there. We got overbought on the Nasdaq. Again, this oscillator just showing its reliability for these pivots, quite nice. Closed down well below the T line. Very large range down. In fact, let me just take a measurement of this bar and compare it with previous. I believe this is probably one of the biggest single down days we've had since we started. So bigger than that one. Bigger than this one on a closing basis, although intraday range was still bigger on this one. This one is bigger, and let's see, that one is roughly equivalent. So yeah, essentially the second largest down day on the Nasdaq as well, as far as price range goes, since we began that decline back here in the 8th month there, which is August. So yeah, Nasdaq peaked earlier and declined harder so far than the other indices. And just looking here, there is a gap down here on the Nasdaq. Potential to fill that gap and then maybe set a higher low above this level, which would allow, and it would actually have to be above this level as well, which would allow for this to possibly be an A, B, C, D, E contracting triangle in progress. If not, this is more likely just A, expanded flat B, or sorry, running flat B, C. So in an expanded flat, you go A, B, and then C would make a new price extreme above this level. In a running flat, you do A, B to new low, and then C fails to make a new high. That's a running flat, and then you come down hard in the next impulse wave down. So that's the two likely scenarios on the Nasdaq. And well, maybe just to make it clear, I'll go to the actual Nasdaq wave chart. I do believe I have one going here. Yeah, I do. Okay, so definitely 5 down on the Nasdaq for either 1 or A. And now we're working either our 2 or B wave. Now we have an A up, B down, and this is potentially C in place for a running flat. Okay, a running flat wave 2 or wave B. Possibly we have our pivot in place already. Or, and this is similar, a triangle forming like this, and then we go down in a C wave. So those are the two kind of scenarios in play as far as the wave count goes on the Nasdaq Composite. Both of them lead to lower prices, though. Eventually, one just happens sooner. The triangle will just take longer to break down there. Okay, back to the thinkorswim chart. So yeah, we'll have to see what Thursday and Friday brings here on the Nasdaq as well. But I don't suspect that this strong of a decline will just stop in its tracks immediately. But we'll have to see what happens. Things can certainly change, especially with the market closed tomorrow. Okay, now we'll go to the VIX. And the VIX, beautiful move off that 200-day simple moving average. And I wish I'd taken my own advice and bought some VIX calls there, or went long VIX futures. In fact, I was considering it, but I just didn't get around to it. Didn't pull the trigger, and would have been a fantastic move. So it went from basically 16 on the VIX to as high as 22, closed well above 20 at 2074. So that could have been a absolutely incredible percentage move using VIX calls. But well, it's just the one that got away, I suppose. But VIX looks like it could be reasserting its uptrend, and we do have this golden cross on VIX, 50-day rising above the 200-day, and we haven't actually started breaking initial resistance levels yet. That would come into play at just under 24. I believe the spike high there was 23.81. So if we start getting above here, then the VIX uptrend will really be gaining some steam, and then we'll be looking to put some pressure and even take out the previous VIX spikes. And this would obviously coincide with the market dumping hard, but we'll have to see what comes to pass here. All right, so we'll check in again. Well, if not Thursday, then after Friday, perhaps on the weekend. Once we see how the whole week plays out. All right, enjoy the day off tomorrow with the market closed. Serial Trader signing off.